Hello once again to everybody. As we promised in the morning, we were coming with a new kind of analysis covering the possible reaction of the foreign exchange market to the United States CPI reading, which should be published some later in the evening today. So, regarding our analysis, I can show once again here it's not a big changes. The situation still the same. Probably some pairs, major pairs, losing the steam of rising against the United States currency. And for example, dollar yen is currently trading around 107.5. And of course, the market is in the situation of wait and see ahead of the critical economic reading later in the day. So let's make a kind of discussion, a kind of a prediction how the market could react to the number. First of all, I'd like to say that we will analyze here the core numbers, not an absolute one, seasonally adjusted, because you know how volatile the gasoline prices are, and taking into account that gasoline prices was on the uptrend, probably the absolute number will come stronger than expected. Also, we don't like to discuss here another economic indicator published today, which is retail sales numbers. Of course, retail sales numbers also is very important to describe the situation in the United States economy. Anyway, today the inflation is number one, and all eyes, or the eyes of all market participants, are on the CPI reading. So we put as a cornerstone core CPI numbers, and we'd like to say that in case of big differentiation, differing the real numbers from expected 0.2% against December, it will be, once again, we'd like to emphasize this, it will be very, very difficult to predict how the foreign exchange market will react to the data. Because here, probably, if the number will come in above 0.3% or 0.3%, it will mean another stress for the stock market. And from one point of view, the dollar should receive a boost, because higher CPI reading for sure should mean a higher United States interest rates, higher return on United States government bonds, treasuries, and at the same time it could hinder the future state of the United States economy because of the possible overheating of it. And of course it does not bode well for the United States currency finally. So here we suggest that the foreign exchange market, in case of stronger reading, should react first of all to the stock market movements. And for sure here the dollar yen should go lower in this kind, because the dollar yen, you know that the yen is a kind of safe haven currency, and we suggest that the yen will strengthen against the United States currency despite of the improved attractiveness of the United States of the greenback on the, let's say, on the background of difference between the interest rates between the countries like United States and Japan. So probably the first reaction will be a little bit higher, but finally the yen should strengthen, and we suggest the dollar yen will come lower. Also, this implies for the euro yen. Probably for those who wants to be in more safe position, in case of such kind of reading of 0.3% or higher, it's better to sell the euro yen, because if you're afraid that also the yen could weaken or the euro could weaken against the United States currency, but I think that the yen will go faster to the upside than, for example, the euro. The initial reaction of the euro, in this case, probably the euro dollar will go lower and the dollar will rise against the euro. But this will be an initial reaction of the market to the numbers, because in case of big collapse in the stock exchanges and kind of increased volatility into the markets and increased risk aversion, it will be very hard. Should the United States dollar will benefit or not? But anytime, the time will show. And we will come some later after the publication with a new report covering the real and situation at that time. So let's discuss now another extreme, and the extreme of lower reading. In this case, probably first of all the stock market should receive quite a good boost, quite a good impetus to go higher and to correct the previous losses. And in this case, the euro dollar should go higher. I think initially for sure it should go higher. That will mean that the dollar will lose some its attractiveness against the other currencies in terms of the interest rates. And here it will be very hard to say where the euro yen should go, but I think the euro yen initially will go higher because of the improved situation with the risk aversion, and increased demand for risky assets should mean that the euro yen should go higher from here. What about the dollar yen? I think that initially probably the dollar yen will go lower because of the will go low because of the dollar will lose its attractiveness in terms of the interest rates. But finally, probably the dollar yen will pay its losses. But here it's really very troubling to say how the market will react to such kind of reading for the safe haven currencies like Swiss franc and the yen, because here of course we should rely on the situation with the stock market. Regarding 0.2% as expected, we suggest that the market is in the position of exuberance of the higher printing of the CPI. In this case, if the market is afraid of higher printing, probably if the number will come in as expected, for example, it will mean some stabilization, and in this case probably all the pairs can go sideways, probably can go initially upwards, after that downwards. Here we suggest that will come a kind of stabilization for the dollar, and probably the stock market will also stabilize, and that will mean that the euro can go, we think, higher from here. As regarding the dollar yen, in this case, we suggest that initial reaction will be, because of the risk aversion, will be higher, but after that lower, when the situation stabilized and the market will realize that the major trend and the yen crosses now are on the downside. But stabilization in the stock market, of course, should bring some calmness also for the for the safe haven currencies. Here, probably the same situation. We can go either to the upside, either to the downside in the euro yen, but probably the market can go higher in this case. That's all. At the moment we don't want to make a kind of strong conclusion, and we suggest that it's better to come with a new point of view some later after the publication, and after we will see how the market will actually react to the data. See you later. We wish you a nice time ahead. Bye bye for now.